Good morning and welcome to Daily Rates Live with the Mortgage Calculator. Today we're going to be going through our live mortgage rates for a few different programs, and then we are going to be talking about high LTV investment property loans. So Jose has some cool examples for us here. We'll take a look at in just a moment. Go ahead and drop a comment there in the chat as you tune in. Definitely appreciate it. And we'll just wait a moment here to go live on all the different platforms. Interesting topic here for today. I don't believe we've been through this topic here yet. So I think this is a new one for us for this show. So it looks like we're live on all the platforms. We'll go ahead and get it started here. What we'll do is we'll take the chat off the screen for now, but go ahead and keep dropping comments there in the chat as you tune in. You can drop any questions you have in the chat as we go through our deep dive topic here for today. So welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a lender that specializes in non-QM loans. And what we do every weekday at 11 a.m. Eastern on this show is pull up our actual live mortgage rates to go over them. And then we do a deep dive into a different loan type. In today's loan type, we're going to be talking about high LTV investment loans. So Jose will get into that here shortly, but before that, we'll do what we do every morning, which is pull up our live rates. So Nick, if you're ready, let's go ahead and pull up the live rates and see what it's looking like this morning.
All right. So before I share my screen, just keep in mind we're going to set up a basic scenario to compare the APRs across the program. If you'd like a full breakdown of all the itemized fees that go into the APR, please get with our team members to get a loan estimate. We have over 300 loan officers to help you out. So we're going to compare the rates for today. It is July 24th, just after 11 a.m. So the initial rate sheets are live for today with a basic scenario, standard single family home. We'll set the purchase price to $500,000, the loan amount to $400,000. That's corresponding to 80% loan to value, 20% down payment. And we'll set the estimated credit score to a 760 and the estimated debt to income ratio to 40%. So with those basic settings, as we do every day, let's compare the options here. So not much change since yesterday. First up today, and always first up on our list is our 30-year fixed conventional option, typically the most common option people think of for a primary home. Rates as low as 6.49, final APR 6.790. Now, if for any reason our customer doesn't qualify for a conventional option, typically the next option we want to compare is an FHA option. FHA allows more leniency on credit issues and a higher debt to income ratio, but does require upfront and yearly mortgage insurance. FHA today comes in at 5.5 rate, final APR 6.477 with all of the fees included. So if our customer qualifies for both, they may want to consider FHA if they are willing to do the mortgage insurance. And our customers that need to use it, definitely very comparable price, especially today, to conventional. So a great option. Now, moving on to our VA option. VA is only for our eligible vets and active service members. If you are eligible for these programs, these are amazing. Rates as low as 5.75. Final APR with all funding fees included, 6.055. So notice if we're comparing this to FHA or conventional, the VA beats it substantially. So definitely a great option for our eligible vets and service members. And the final standard option here is our 30-year fixed USDA option. USDA is only eligible for properties in rural USDA areas. So if our borrower and property is eligible, this is a good option to consider. USDA comes in today at 5.75, final APR 6.5 with all of the fees included. So our customer will usually compare this to FHA, which today it's almost identical, which is kind of weird. Usually it's a little less, but definitely better than conventional if our customer is comparing them. So good option for our customers looking in those areas. Now, those are all our standard options that any other banker lender has. But if our customer doesn't qualify for those, many other lender options will have to deny that customer. But we can present thousands of other options. First up, our 30-year fixed non-QM alt-doc option for our primary home. So if our borrower doesn't qualify using conventional tax return type documentation, you can use alt docs such as bank statement, 1099, P&L statements, all kinds of different options. Our lowest rate option here is most likely a bank statement option, coming in today at 6.875 rate, final APR 7.196. So when we compare these side by side, if our customer needs to use alt docs, Very comparable rate within half a point of conventional there on the final APR. So a great option for our customers that need to use it. And we can switch over to investment properties where we have a lot more leniency on programs, and Jose will present some of those today as well. But for a standard non-QM alt doc, again, bank statement or similar for an investment property, rates today come in at 7.25, final APR 7.568. And we'll compare that to the other investment property options. No government options, so no VA, USDA, or FHA, but we do have our 30-year fixed conventional for investment properties coming in at 7.125 rate. Final APR 7.482. So notice that's better than the alt doc option, which is great for our customers that want to use standard docs. But we always recommend all of our investors check out our favorite options, the DSCR options. DSCR stands for debt service coverage ratio. We don't need any income or employment info. We just use the estimated rents from the appraisal to determine a DSCR ratio. If the estimated rents can cover the expenses, aka the property cash flows, that's a ratio of 1 or higher, which is preferred. For all these demos, I use a ratio of 1.5 so we can see all the programs. 3-year prepayment penalty is standard on these programs, so that's the first option here. Rates as low as 6.75. Final APR comes in at 7.080. which beats conventional substantially there, which is amazing. And some of our programs allow us to add a 5-year prepay to improve the rates even more, coming in today at 6.5. Final APR at 6.810 with a 5-year prepayment penalty, which again beats conventional by a substantial amount. And there are options for no prepay. Some states don't allow a prepayment penalty, and some investors don't want one. We have those options for 7.375. Final APR 7.710. So since this is almost directly comparable to conventional, it is a touch higher. Most of our investors will still choose this option. And if possible, we recommend adding a prepayment penalty to improve the rate. And the final two options we always go over here are popular 30-year fixed second mortgages. So a lot of our customers have a low rate first mortgage, but still need to access that equity, record equity in the country right now, but don't want to touch that first mortgage. And HELOCs are pretty expensive with the way the rates are right now. This is the perfect product. Our 30-year fixed second mortgage for a primary home can get cash out rates as low as 8.5, final APR 8.915. And these are non-QM programs, so we can use bank statements and similar, and allows our customers to get a much better rate than a standard HELOC with the fixed rate second mortgage. And same thing for investment properties. HELOCs are very rare for investment properties, so very good option here. Rates as low as 9.875, final APR 10.124 to get cash out of an investment property with a fixed rate second mortgage. So let me go back and switch my screens here. And we'll get into today's deep dive topic. We don't get to do custom scenarios every morning. We always do a standard scenario so we can compare all the programs. So today, Jose will push all the right buttons to bring those LTVs up as high as we can for our investment properties. Definitely a popular request. Investors want to put as little down as possible, especially when conventional options typically require a little bit more than some of our cool investor options. So I'm sure Jose has some surprising tricks up his sleeve where we can beat the down payment offer of conventional programs using our non-QM options. So Jose, let's check out some cool options here.
Yes, today we're definitely having a mindset readjustment here in how we look at our loan opportunities. It's always good when we provide all of these outside the box options to actually save the borrower money from what they thought they were going to be able to do. This reminds me of the loan that we just restructured. They came into the support room thinking, the MLO thinking it was going to be a full doc investment loan at 80%. And it actually ended up being a bank statement and W-2 loan at 80% at a much lower cost and much lower rate. So you're going to see some of that today. So let me get right into it here with our high LTV investment property options. Remember, at the Mortgage Calculator, we have over 5,000 different configurations of our non-QM loans so that we can give you options to save you money. So I normally put the DSCR at the end, but in this case, I'm putting the DSCR in the beginning so that then we can compare as we go through all the other options what we're really dealing with. Now, the one thing to be aware of with the debt service coverage ratio loan, uh, from a full doc loan, is that in the debt service coverage ratio loan, we are qualifying the borrower based on the gross rental income generated by the property divided by the total housing expense, principal, interest, tax, insurance, and if applicable, um, association fee, right? We're never going to have any mortgage insurance on any of our non-QM products. So you would have to make sure then that your housing expense does not exceed your gross monthly rent. In other words, if it drops below 1.0, right, you're not going to be able to go with these high LTV options. And usually the 85% option some of the options may require you to be a little bit above 1.0, right, as debt service coverage ratio. If you're faced with that scenario, then you would pivot to one of the other income documentation options, whether you're going to go full doc, bank statement, P&L, or 1099, which are our most common options. So here we are at 8.499 at par. Now keep an eye on this 8.125, or actually 8.124 number, because this is when we're going to be comparing at the end to our conforming 85% full doc investment property purchase. Yes, that is an option out there for those of you that weren't aware. So here, par at 8.499, 0.85 points at 8.124, and you can buy that down all the way to 7.124. And also keep in mind that our 2.75 price, or what it would be around 2.75 price, is somewhere in between 7.249 and 7.374. So keep that in mind as we look at our other examples now. Our bank statement option, right? So if the DSCR does not work for you and you are self-employed, then we do have our bank statement option, which is 8.874 at par. Remember our DSCR was at 8.499 at par. So the bank statement option is actually a little bit higher. And then at 8.124, we are at 1.5, and 2.75, we're 7.499 with our lowest rate option, 7.249. This is for our bank statement option. And our profit and loss option, I guess you probably figured out by now that 85% is our maximum LTV for investment properties. Now, our profit and loss option, same rates as our bank statement option. 8.874 is at par. 8.499 is costing 0.75. 8.124, 1.5. Our 2.75 cost is 7.499, and we can buy that down to 7.249. Now, our 1099 option for our 1099 borrowers, like realtors, for example, those are one of our favorite 1099 groups. All realtors receive 1099s from their brokers. A lot of other options for 1099 borrowers out there. Doctors, for example, working now, they were W-2. Now they switched over to 1099. That's another very popular 1099 groups. Doctors now working under an LLC. And again, the same cost. Now, one of the benefits of the 1099 is that we can use 90% of the face value of the 1099 as the income, only a 10% expense factor. And 8.874 again at par. Our 8.499 is costing 0.75. Remember, our DSCR was at par at 8.499. 8.125 is costing 1.5. Our 2.75 again, 7.499, and we can buy that down to 7.249. And you'll figure out in a minute why I'm highlighting those numbers. Now, our non-QM full doc purchase, our true full doc using tax returns, W-2s, pay stubs, whatever is the income stream for your borrower, full doc, whether they're self-employed or salaried hourly. It's full doc using traditional full doc verification methods. So now we are here 8.499 at par, same as the DSCR. So the DSCR and the full doc and non-QM both at par. And our 8.124 is 0.75 cost. Our 2.75 would be around the 7.249, which is costing 2.625. And we can buy that down all the way to 6.999. That is pretty amazing for a full doc. 85% LTV investment. And remember, as with all non-QM products, never any mortgage insurance applicable. So now you'll see why I was doing all of the comparisons, because this is our only rate option and lowest cost option that came up for an 85% LTV investment conforming, and conforming loans are always full doc. So this would be our conforming full doc purchase. Now remember, on our conforming loans, this one is a conventional Fannie Mae, never any prepayment penalty, right? So no prepayment penalty on here versus I think I had a 5-year prepayment penalty on the other options. That's why we get such great rates on those, right? You get a good size credit for adding any type of prepayment penalty, 1, 3, or 5 years. So in this case, our only rate option has a cost of 2.5 points. Compare that to our 85% full doc option that I just showed you, which in case you forgot, here it is right here. You can see it right here. 0.75 versus 2.5, right? So that's quite a bit of a difference there, 1.75 points. And then on top of that, we do have a 1% loan origination on our cost on our non-QM. So even then, we're still going to be almost a full point less expensive. So, what's 0.75 of 425,000, roughly $3,800. $3,600, somewhere around there. That's a good amount of money where the customer can choose to spend that money on a lower rate and then get you 7.749 for the same cost, more or less, out of pocket, that they're getting here, 8.125. And then on top of that, there's a mortgage insurance of, I believe it's $88. That's not included in this payment. So you are at 3,200, 3,240, around there, more or less. 3,240 would put us an effective rate here of roughly 8.374 if you factor in the mortgage insurance cost into the payment. So you can see 7.749 that we could get on the full doc option for the same cost is going to be a much better rate, unless your customer just absolutely does not want a prepayment penalty. I don't know why they wouldn't want to save money, and for whatever reason they want to go with the agency loan and they happen to qualify under full doc. But we really find that in most of the cases, what ends up really happening is that they may not always qualify under full doc agency. At that point, you may go full doc non-QM if you want the 1-year income option, for example, for your self-employed borrowers, or bank statement, P&L, or DSCR, right? So you can really see how we put everything into perspective here for everybody today, and why we're so excited at the Mortgage Calculator with all the options that we can offer. So definitely look to us for all of your investment property loans.
All right. Let's see here. Looks like we do have a question. We can pull up. The question is, you mentioned using 90% of 1099 income. Is that as long as the tax return supports that 90%?
No, actually, the great thing about the 1099 for income program is that we do not need to provide tax returns as long as we can provide a tax transcript of the W-2 and 1099s. There is a specific transcript for that. It's not the record of account transcript that lists all the income. That's just a transcript that lists the amount of each W-2 and or 1099 that was issued to that Social Security number. So as long as we can get that transcript to reconcile with the 1099 that we've provided, that's it. The 1099 has been vetted as being valid and accurate, right? That's the one that the employer or the company that contracted our borrower, let's really put it that way because they're not employees, reported to the IRS on their behalf. So no tax return would be needed as long as that can be provided. That's the whole purpose of the 1099 program, the P&L program, the bank statement program is no tax returns are required.
All right. I don't see any other questions, so I think we can wrap it up. A great, interesting topic here for today, for sure. So remember, we do this at 11 a.m. Eastern every weekday, where we go through our live rates and then do a deep dive into a different loan type. So we will see you with a new loan type tomorrow at 11 a.m. Eastern for the next episode of Daily Rates.